5th, 2024. This is going to be a day that goes down in history that we talk about forever, right?
June 5th, 2024?
June 5th, 2024.
The
first
TSN turning point?
I like that. The TSN turning point. The first Bank of Canada rate cut. Anticipation is that there will be more this year. Anticipation is that 2025 will bring a few more. But we'll kind of get into that of what mortgage brokers and economists are kind of predicting for the coming couple of years. But also just acknowledge that June 5th, 2024 was the first Bank of Canada rate cut. They dropped the overnight rate 0.25%. And so now that is sitting at 4.75%. And the prime rate, which is what variable mortgages works off of that Bank of Canada rate. So maybe let's start by we're a week in now. Today is June 13th. Have we seen a change in consumer sentiment? Have we seen a change in activity?
I'm going to go with no. No. Well, I'd say sentiment is different, but it's too soon, right? The overall message that I think is kind of hopefully being received is there's a little more optimism that the worst is behind us.
Yeah.
A rate cut's not going to save our economy and fix a lot of long-term issues, but in short term might just lead to a little optimism that the market needs. Ultimately, if it wasn't a rate cut and it was a rate hike, there'd be more people standing on the sidelines.
Yeah.
So in Vancouver, it seems to go from hot to cold market very quick. And I don't know about you, but I'd rather have the buyers kind of slowly flood into the market as opposed to be, blocked, dammed up over time and then all release at the same time. So, these little rate cuts to me are just little releases of buyers every time they happen. And I think that's a much better way to ease into the future market, hopefully.
Yeah. Let's acknowledge that we are realtors in Greater Vancouver. And what we want to focus on with these rate cuts is how it affects real estate in Greater Vancouver. But the reason that Bank of Canada is cutting rates is not because of mortgages, is not because of real estate in Greater Vancouver and the prices and the activity. It's because of the Canadian economy. And we're just kind of going to summarize and predict what that will do to Greater Vancouver as potentially we see more rate cuts moving forward. I kind of agree. I think a week is not enough time to share much information about changes. I think we kind of predicted that June or July was going to be the first rate cut, but that it wouldn't really affect market conditions in Greater Vancouver much going into the summer. It's been a much slower spring than typical. Typically, we see a ton of activity in April, May, June, and April was a pretty slow month, and May was. Do you see the sales numbers for May? It's 20% lower sales volume than May of 2023.
Yeah.
And inventory is now above the 10-year average. Inventory numbers went up. The headlines in
more listings,
CTV and things like that were not pretty. But maybe I'll mention a couple and just tell me if you're a consumer with little real estate knowledge in Greater Vancouver, what do these things make you feel? And one of them is inventory reaches levels not seen since the pandemic. So my guess as a consumer is you're seeing that and thinking, oh, things aren't selling, prices are going to go down. Another one is Vancouver home sales fall nearly 20% in May as inventory climbs.
A lot of doom and gloom so far. Yeah.
Yeah, it's not optimistic. And
no.
And another podcast that we'll do is just going to be talking about different areas and what May looked like in terms of sales volume and what's selling and what's not, kind of thing. But this last week, I would say the sentiment is slightly more positive, feeling like we are on the way down and optimism is coming, and more inventory means buyers are a little less frustrated than they have been in early parts of the year. But we haven't really seen much in terms of activity on listings or, new splurges of multiple offers and things like that yet.
No, I think my hopeful positive from this rate announcement and the future ones to come is that, last couple of years, it's been a really slow summer and fall, and the seasonality of our market has really shown its colors. That the spring is smoking busy, and then in the off season it dries up. With little rate if there's more rate reductions to come, it could just mean a busier summer and a busier fall. And I think that's better. A little more market stability, a little more buyers kind of spreading out. Like, you want buyers to be buying all the time. You don't want them to be out going back to 10 offers and multiple offers overnight. So there's going to be a moment, and I could see it coming next spring, but there's going to be a moment where there's a lot of people that wish they moved during a time like this, because it's a very frustrating experience to buy when the market heats up.
Yeah.
And we forget fast in Vancouver. So all in all, I think the next rate cut will bring more optimism. I think this rate cut was just more of a message, and a message of hopefully the worst is behind us. But people that are really involved know that the 5-year fix is still high. Most people still can't afford to move. It's not solving a lot.
Yeah.
On the inventory side that you commented on, a lot of doom and gloom headlines. Accurate ones should be accurate headlines don't get clicks, but market's not that bad in desirable price points, right? If you isolate the active price points, what families are trying to buy, the entry-level condos, entry-level homes, they're actually they're quite active. So yes, inventory is up, but I would say if you're a buyer that's out there looking right now, with a few exceptions of some areas, inventory is low in a lot of areas for a lot of desirable property types. So when you isolate, call it under $2 million detached homes in Central Coquitlam or Burnaby, that's not a buyer's market. It's more of a seller's market. Townhouses, 3-bedroom townhomes, same story. Every area is doing something different. In weird markets like this, you can have one area and price point that shows that it is a strong buyer's market and sellers are just struggling to sell. In another area, you're looking at, 40% of the listings are selling at full price or above. And on average, they're going for 100% of the list price, and that's not a doom and gloom headline market.
No.
So which market are you talking about is ultimately the question that needs to be specified.
We say that the sentiment of buyers hasn't really changed with this one rate drop and probably won't for another 1 or 2 drops. But maybe share what is the sentiment of buyers that you're working with right now? What is their, how active are they? What is their thought process? Are they frustrated? Are they patient? What is it?
Some buyers are just frustrated because they don't like what they see in terms of the house. They're not as sensitive to the price or the mortgage payment.
Yeah.
There's some buyers that are wanting to buy a house that are very in tune with the mortgage payment and questioning the decision of, this is what rent is now. And if I buy a $2 million house, it's going to come with a $6,000 or $8,000 mortgage payment. So looking at today's mortgage payment based on today's rates is a little bit, I don't know, it's intimidating, for some buyers. You kind of have to do the math on what you think a 3% or 3.5% 5-year payment might look like, or mortgage payment might look like to justify the payment that you have to agree on today.
Yeah.
So I'd say some buyers are completely unaffected by the rates and more just frustrated with the products they're seeing, and then other buyers are, concerned about the rates. It's different for everybody.
Yeah, honestly, that's the most common thing for me too. Is that the headlines say there's more inventory, and the stats say there's more things that are sitting on market longer, but as active buyers in these price points that are active, that are the typical, young family upsizer to a 3-bedroom duplex or a larger 2-bedroom condo or a 3-bedroom townhouse or that entry-level house in the Tri-Cities or New West Burnaby, those products are few and far between, and the good ones. And the good ones that come up that list properly have 25, 35, 45 people coming through over a weekend and getting multiple offers. And there's one of those every week or two. It's not like there's 7 to go see in a weekend like there has been in other slow markets that we've seen, like 2019. This past year has been, I'd say the number one word for people looking to buy is just frustration of lack of good supply that's priced properly. The majority of that stuff that's sitting on market is just overpriced and not willing to move, and they're totally fine sitting on market 6 months. Like we wrote an offer on a townhouse in Olympic Village yesterday that has been on market since November. No price adjustments. They're just happy to just wait it out. And that's a lot of the reason why the inventory is where it is, I think.
And you can, unless the seller needs to sell, there are many sellers out there that are pricing their place above what the market should be. Yeah. And there are also many people that are holding off on listing their place because they anticipate next spring's prices to be higher.
Yeah.
If you look at the forecasts of where they anticipate rates to go, you'd likely, if if it happens, I don't know what the latest it changes all the time, but I'll use like a round number of, I think I heard something where it's 1.5%. It's going to go down by the end of next year. So from peak to the end of next year was a prediction. I think that was a TD Bank one. And if that happens by the end of next year, you'd anticipate it to be more of a seller's market, prices to be a little higher than they are today.
Yeah.
And a lot of people wishing they transacted sooner.
Yeah.
We've been through this so many times. You do not want to be a buyer when there's 10 offers on every listing that you see. So to me, it would be better if you can afford to do so, be a buyer when the mortgage payment's high and other people are scared to buy, than wait until everyone moves. On the sell side, I think more people are willing to sell because I think a lot of buyers have a product to sell. That's part of the slowdown is you more listings. When more people buy, more listings show up. It's just part of the synergy of how the market works. And I think right now there's been, from what we've seen, we list good homes. Some of them hit, some of them don't. The ones that don't, doesn't mean that they don't have buyers interested. It's that the buyers that are interested aren't willing to make the move right now, just largely out of fear. And that we're just seeing a lot more of that. Whereas spring of 2022's, 2021, there was no fear. You just had to jump in subject free and then sell your house right away. And it was a wild west back then.
Totally. I've seen a few different lenders' predictions for the next couple of years and where rates are going to go and how many drops there's going to be. And it seems like the consensus, the kind of average of all these different performers is 2024 is going to have 2 more rate drops. That's what most people agree on.
Total around 0.75%?
Yes.
Yeah, okay, yeah.
When I say rate drop, let's assume that we're talking about a 25 basis point drop. Next year, they're predicting 3 to 4. So 0.75 to 1% drop. And then 2026, another 0.5 to 0.75. So overall, in the next 18 months to 2 years, the prediction is that rates will come down another like 1.5 to 1.75% and kind of settle in that range where the overnight rate is 2.75-ish.
Yeah.
Which will make your prime rate +2. So that's been like the 4.5 kind of range.
Right. Yeah.
Your variable.
Yeah.
So I was quickly mentioning this. I golfed with 2 mortgage brokers yesterday, and just kind of like one of them who's been like doing a lot of mortgages for 17 years and talking about like this slow period, the last year and a half, 2 years versus 2019 versus 2008. And he said the consumer sentiment of like who he's working with and the volume has been like much more negative this year, this past year and a half than it was in 2008 and at a longer period too, right? 2008 was kind of your start to your career, but that was maybe like a 9 to 12 month real negative period, or
it was a 12-month blip. It could have been arguably 9 months in some spots, but yeah, I do remember at the August of 2008, it was a 5-year fix at like 5.99.
Yeah.
And by the next August, it felt like the market was back on track. But by November to February, the sky was falling and the world was falling apart back then. This is 2008, 2009. Yeah.
One of the things I was asking about is like, one, what products are consumers choosing right now? Yeah. And he said almost everyone is going back and forth between a 3-year fix and a variable. And so he's run a bunch of numbers, obviously, to just kind of share with people. And basically the break-even point today is if there's another 0.75% drops in the next like year and a half, that'll basically tie a 3-year fix. Yeah. Versus if it gets to 1% drop or over a 1% drop, the variable is going to win.
Got it. That makes sense.
So he said this is basically the conversation he's having with every consumer right now. Not many people are going towards a 5-year fix at the moment because of this anticipation that rates are coming down. Are you seeing the same thing with consumers?
I mean, the conversation before months ago was 2-year versus 3-year.
Yeah.
Now it's 3-year versus variable. And I guess the logic to go with a 3-year fixed is the commitment time. Freeing yourself up in 3 years to renew your mortgage is, to a lot of people, a very good time to do so. The logic for the variable is that I think based on the rate predictions, you're more likely to win, but there needs to be a risk spread, right? So fixed needs to cover that risk. So, anyone that's been heavy on variable last few years might be a little less willing to renew at that level. Yeah. But I bet you maybe, and again, we're not all experts in this, but maybe by 2026, the conversations, the 5 years will start looking much better, and that will be more popular. But I think the sentiment is that it's going to be a while before the 5 year comes down. So the next mortgage you choose is, do you want to gamble with a variable or tee yourself up for great timing on the renewal with a 3 year?
Yeah.
I think there's an argument for both.
Maybe just to put some numbers out there to get a sense of this, a typical 3 year fixed rate right now is in kind of the range of 5.25 to 5.3 kind of range. And your variable right now works off prime. So prime is 6.95 and a typical discount is 0.7 or 0.8 off that. So your prime or your variable mortgage is going to be around 6.15 versus your 3 year fixed at 5.25, 5.3 kind of range. Yeah. So you're currently with variable, you're plus 0.8-ish, 0.85?
0.9. Let's just 0.9. Go, I mean, give or take. Depends on the circumstance. But let's call it 0.9% more currently if you had a variable payment. Yeah. And the thought is by the end of next year, it'll be less. So, rates aside, guessing game. I think the short-term fix makes a lot of sense. But all in all, this last rate announcement to me, my hope, the biggest positive that I hope comes out of it is that we see a busier summer and fall than we saw in the last few years, so that it alleviates some of the pressure that we might see next spring. If more people transact this fall and summer, it will just hopefully lead to a less chaotic spring market next year.
We, as realtors, we wear a lot of hats and we get asked questions in the realm of accounting and legal and economist over the last couple of years. But if you, let's say you specifically, don't give people advice because we're not allowed to do that. If you're taking on a mortgage right now, are you going 3 year fixed? Are you going variable? What are you doing?
You know what? I'd probably go variable just because I feel like, I'd hate to do the emotional response of not doing variable after being burned by variable. Yeah. I'd probably go variable. Depends on the spread a little bit, but 3 year, I'd be stewing that one over and flipping a coin potentially in the last minute.
It's funny even just to hear Jamie talk about this stuff, because typically our history is almost all variable, myself and you. And this little rate cycle, this last 2.5 years, has even gotten the people that, like us, that were absolutely not, I'm never taking a fix, to reconsider, right?
Yeah, there's the 2% rule. Yeah. 5 year fix ever get to 2%, you just take it. Take it. Yeah. Any, I guess other notes to share just in the newest headlines is this capital gains cutoff doesn't look like it's going through, right?
June 25th.
Yeah.
There hasn't really been much more in terms of like public knowledge or public awareness that they've talked about it anymore. June 25th is the deadline where I believe they're voting on it.
Yeah.
I haven't really heard much. So I've got some insider information that says maybe it's not looking as positive to go through as it was previously, or as we kind of assumed that since they've announced it, that this is something that's going to be coming in this summer. And
I think in the highest level, when they announced it, it was more concerning and a lot of people reacted to it. Yeah. And whether that's selling properties or anything that is affected by the higher capital gains. But the sentiment in the last week, and I guess we don't have official news, we're not accountants in this world, but the sentiment in the last week is that it's likely not to go through. So we're before that news becomes official. Don't hold us to it. Time stamping this, Denny. What day are we? June 13th. So we'll find out next week or next 2 weeks.
We're the middle of June. I think it's difficult to predict even into the fall, but what do you think the summer looks like, July and August?
I think we're still going to have that mid-July to early August lull, leading up to that long weekend and just after. But my hope is that late August, September shows a little more action. Yeah. And the late July, if that comes with a rate cut, which people expect it to, I mean, it's more probable that it will cut than it won't. I think that could boost a little more sentiment. Yeah.
I kind of agree. Yeah. I think there's some scar tissue in consumers in Greater Vancouver right now that they want to see a little more. And even if there's a July cut, it's probably going to be 0.25. And I still think we have a slow August.
Yeah, you might be right, but I think the advice that I'm given to the sellers that aren't ready today, that are ready very soon, is I rarely suggest listing at the end of July leading up to that long weekend. So it's either like get on the market now, get on the market right after Canada Day, or wait till after that August long weekend.
Yeah.
And, not all products, like if you're a 1-bedroom condo, it's less volatile. But if you have a family home, it's just a matter of, do you really want to list at a time where a lot of people have vacations?
Yeah.
And it might work out well, but if you have no offers to look at on week 2, you're going to be questioning your decision of the timing you chose.
Yeah.
Yeah.
Next Bank of Canada meeting, July 24th and then September 4th. So
you know what? By September, there could be 2 favorable news. That could be an interesting fall. Well, we'll see, Denny. We'll see.
Wonder. My guess is not that there's 3 in a row. I think one of the next 2 meetings is going to have a 0.25 drop. But
I feel like, you know what? We're going to have to make a bet on this one of these days. So let's find out what the next one. I'm going to guess 2.5 in the next one as well.
0.25.
0.25, yeah.
2.5.
Yeah, 0.25.
Let's go. That'll spark the market activity, yeah.